This video is I show you how I make money in stock market. I used to be truck driver for the last since 2016, and this year I'm gonna decided to go full time in stock market. So I'm gonna show you how much money I make since January so far, how much money I lost, what I did to make this money and to lose what I lost. And I I know that trucking is one of the most hard jobs. I think for a lot of this industry, people are working extremely hard and they're also making a lot of money, but the risk is very high. And I decided that no more trucking, and this is how I'm going to do what I'm going to do. And instead of buying a second truck, I decided that I'm going to put about $36,000 into stock market, and I'm going to sell stocks on daily basis. So far, this is how much I made since from January 1st. You see, January 1st I made nothing. January 2nd I made 2,000. I'm gonna just explain how much I make. You can kind of see how much I make on every day up to today, and then I'll show you uh, what I did to make that happen. I also show you how much I lost, because you don't win all the time. This is how much the total money I made is $7,287.69, and this is how much I lost, $1,799.31, and I walk away with $5,488.38. So I'm going to show you. I'm going to go to the actual to the spot in the calendar. You can see. So here is what I did. Let's see. So this stocks, I basically buy stocks, right? I buy this one and then I sell them. I show you. These stocks, I basically, this is how much money I made today. 1,312, and you're gonna see. I'm gonna show you the stocks, and the stocks. This is how much money that the price of the stocks go down. That's how much the stock price go down. But as long as you stay in the market, you don't sell the stocks, the stock will always go up and down. So that's not gonna be an issue. I'm gonna show you the stocks I'm talking about. This is a stock right here. Right now the stock price is 2,777.99, and I paid $19,000 for 100 share. For 100 share, and then the goal is to sell it, to sell the stocks as an insurance. That's basically called short sales. For example, if I want to sell the stocks for 7 days, because that's a day basically, day 14, 21, 28. Let's say I want to sell it for 7 days. What I'm looking at is I'm looking for low delta, and I'm selling it to the market. The market buy this because the people that are buying this basically think that the stock's going to go up past whatever numbers that I pick. I'm going to pick whatever numbers on here, basically saying that this stocks, so right now the price is 2,775. That's the price that when the stock closes. So I'm basically saying that this stock price is not gonna go, let's say, above delta 15. This is a delta. That's the number. It's called delta. So you're looking for lowest delta that you can make money at the same time. The price of the current stocks is not gonna be able to go all the way over there, because it's so far away. Within a day or within within a time frame within the 7 days. And there is a way you can make sure that to a very good probability that it's not going to get there. And I'm going to show you how. So let's say the stock right now, the price is 2,775. So let's say I'm going to sell it. Remember, to sell it, it doesn't cost you any money. You get paid to sell it because you already have the stocks. You already bought 100 shares. You're selling that back to the market. So I'm going to show you how I do that. So let's say you go to the Delta 15. This is like Delta 22. See that? Just to give you an example, click on here, and then it's gonna go to single, and then I'm gonna click on sell, and then what I will do is, you see how I'm selling it, basically saying that this stock price will not go above 2,150. It's not going to go above these within 7 days. That's all that is to it. There is nothing complicated about it. And the current price of this stock is 2,075 point something, basically $2,075. And within 7 days, it's not going to go up to this, what I'm saying. And also, let's say I'm wrong, that the price starts to go up, move to closer to my price. If you come closer to my price, if you come closer to my price of 2,150, I can move it up. I can just basically move it. Okay, and so to do this, go ahead and say I'm done, and then you have to be on the sell side. Remember, you have to be on the sell side, and then you get immediately this money, $350. You get credit immediately to your account. You will, as soon as you submit sell, you will get credit to your account right away. You click sell, and as you can see, it says you basically getting $350 to your account. So that's how it goes. But sometimes you gotta be very careful. Look at where the stock price of where this stock price is being in the last months. There is a way to check, make sure the movement of the stocks. You see, for example, this stock price is being in January 12th. This stock, the lowest is being 2,122. January 12th, 2,122. The highest is 2,165, and then on the 14th it's been. So it kind of give you the range. You see what I'm looking at is right here, the range, high and low of the stock price. If you click on this, it shows up on there. See, say high and low. So you look at the range of what's the possibility statistically with this and where this price has been in the last couple of days. And you can also do daily. Let's say I don't want to do 7 days or whatever. It's too risky. You can just do daily. Assuming the stock market is open right now, and you just look at where the price of this stock right now. If it's 275, you go to 275, and then pick a number. This is the current price, and then you have to pick a number that you think that this stock price is not going to go up to. It may not go up to 285 from there, but that's too close. You don't want to do that. You always want to give yourself enough time. One is let's say you pick a number. You pick because this is today, and it's already, the market's already closed, so the price is going to be very low because the market is closed. So let's say you want to sell this one right now, assuming the market is open. When the market's open, that number 2 is going to be very high. It's going to be maybe 7 or 8. Now you could look sell, and then once you sell it, remember right now it shows 0 because the market is closed. When the market opens, there's going to be delta numbers. There's going to be implied volatility number. There is going to be TIE, this number also. So when you're looking at that, you have to be within the delta. The delta, the way they advise is that this delta measures the probability of the movement of the stock prices. So if you want to be far away from the current price of the stock, you want to be over here, far away, the measure between this price of the stocks and this one is sometimes the delta basically says this is like 5%, like right now 0.05. That's a 5% chance the currently within today the stock price is going to go up to 2080. So that's kind of how I'm able to make it. But I don't just do it with one stocks, I do it with all kind of stocks. So that's how I'm able to generate money. But what I be very careful is you have to learn to move it away. Let's say you decided that you buy. First you have to buy the stocks, because that's the only way you're going to be able to sell short calls. It's called short calls. One is you buy the stocks. See, I buy these stocks 91 days away. Basically, I'm renting this stock for 91 days. Only for 91 days. Every day, I'm gonna sell short calls on it. I sell short call on it, like today. I sell short call on it, and I made 1,300. It's not always gonna be that much, but the goal is to make at least, 400 or 500 from this one, and from any other one. There's a bunch of them on here. On here, there is stock market. Is a lot of companies. Also, I did the same thing on Tesla. This is Facebook. So it doesn't matter that this price of the stocks is going down a little bit. The market will always go up and down. I'm not worried about this, because the stock market one day goes up, the next day goes down. I don't want to just buy the stocks and sit there and wait for it to go up and down, and that's just what everybody else is doing. But instead of sitting and waiting for these things to go up, and after a year and a year and a year, I can just sell it short calls and make money, generate income that way. This is not the only way to do it. There's also another option where, let's say you just deposit the money, you don't buy the stocks. Let's say you have some money on here, and you want to buy the stocks in 7 days, but the current price of this stock is 620, and instead of buying it at 620, let's say you want to buy it at let's say 500. You want to buy it at 500. Basically, you're saying that you're going to buy these stocks when it goes down to 500, and you get paid for that. I'll show you what I'm talking about. It's called cash secure put. This is what it's called, cash secure put. You click on this, and let's say you pick a January 23, which is 7 days from today. You pick that, and then strike price. Strike price basically is the price that you say you're gonna buy when the stocks go down to this level of price. instead of buying it at $620. 620. The stock right now is, one of them is 620. Okay, 620 for one share. Instead of buying it at 620 for one share, you say that you want to buy, let's say at, you pick whatever number, it doesn't matter. Either of these numbers, you still gonna get paid money. You know, but the farther you are away from the current price, the lower you're gonna get as far as the premium. It's called premium. So let's say 620, you want to get, you don't want to be at 620, but you want to get as much premium. Let's say you want to get it at 590. That is $78. That means that you go ahead and sell these stocks for this money. Let's say they give you this money right away, just like a short call that we talked about previously, but they will hold the money that is you're gonna buy the stocks with. Basically, it's like a collateral. You say you buying the stocks, but you're buying it at let's say 590 instead of 620. For that, they're gonna hold the money. They'll hold the money, and then they give you that. And if the stock price don't go down to 590 on the day, you get your money back, and you get that money back, the collateral, and the money that they give you right away, right now, the $77, it's yours to keep. A lot of people do this all the time. They do this on the stocks that they love to buy. And so, but this one, I don't like this one. And there's also another way. Let's say you already own the stocks. Let's say you already own the stocks. You love some stocks that you have, whatever stocks, it doesn't matter. And you want to do a cover calls, what they call cover calls. The cover call is, you already own the stocks, right? You already own these stocks, 100 share, and you wanted to sell it. Let's say when you're selling it to when you sell the stocks to the market, if you already own the stocks, you want to sell it to the market, let's say at 650. Remember, right now this stock is at 620. It's 620 right now. You want to sell it at 650. You already own the stocks. It doesn't matter at what price you bought it. You have 100 share of these stocks. So you sell it to the market at 650, assuming the stocks don't go up to 650. Whatever money that the market gives you, you keep the money if the stock doesn't go up to 620. This is, I'm telling you, amazing to look at that. So that this is also, if you already have the stock, this is one of the best way to make money. But the only issue I have with this kind of arrangement is, I don't want to buy stocks and get stuck with one company, because I want to be able to move around. That's just my preference. So let's say you do that, and this is how you do it. You basically, let's say you have 100 share of these stocks. Remember, 100 share of Tesla is a lot of money. One share is 620. So times 100 is a lot. So you basically doing cover calls, you sell it, and they give you, that's how much you make, 133. But the only reason why the money is low is because you're too far away from the current price of the stocks. Because the current price of the stocks, the closer you are to the stock price, the more money you make. Also, the more risk you take, that the price of the stock price is going to go up to your strike price. Strike price is the one you pick. Let's say you want to sell it at 650. 650, you're selling it. The current price is this. But if your goal is to just sell the stocks, you don't care. If it goes up to 650, you have nothing to lose. You make more money, and at the same time you're selling it. But if the goal is for you to just make money from the stocks by just selling it, cover calls, this is called cover calls, but you don't want the price of the stocks to get to 650. That's why you want to be a distance from the current price. That's the whole mission. I hope you understand this, makes sense. If you have any question, let me know.